everyone, and be welcome to the second RV seminar of autobiz. We're a bit ahead of schedule, so we will let an extra 30 seconds for all of our dear attendees to join us. Hello. Okay, thanks all of you. It's 1:15, so we can start now. Again, very happy to have all of you today. I'm Emmanuel Labi. I'm the CEO and one of the founders of autobiz, and with me today is
Jordan Pageot, and I'm the head of RV at autobiz. Nice to be there.
Today, we're very, very happy to have you for the second of our RV webinar of the year. And this seminar today is focused on how to position residual values in a changing market. And because market is moving quickly, and so positioning is very key. We also wanted to add a lot of news and new stuff compared to the first seminar and webinar we share with you. The first one being that after our Pan-European seminar of today, you will also have, for those who are interested by that, national seminars starting tomorrow with our colleagues in Italy, with a seminar that will be animated by Pageot, our country manager. Also on Friday, one specific webinar for France with Jordan and Daniel from our HQ team. We also have, the date is not scheduled yet, but it will send you as soon as possible, another seminar for Spain and Portugal. And for those who have not seen the news we sent a couple of weeks ago, we also have signed a very important partnership agreement with Jaito Dynamics that will, and what does it mean for us? Basically, it means that Jaito Dynamics provide the high quality new car data and specification, and we as autobiz, we provide residual values, forecast values, and current market values. So all together and totally linked, you have the best of the two worlds, of the Jaito world and the autobiz world. You also provide us as autobiz our VIN decoding system, totally related to the Jaito taxonomy, which at the end of the day, with the VIN, provide you with the Jaito code of the version of the car, but also all the installed option, and with the Jaito data about it, including pricing. So that's very much what we provide in terms of product, but it's not only about a sales partnership, it's also about a research partnership. And you can, for those who want, currently use the image to click and already book this event, because we will also have in the next months some events with our Jaito friends in order to also provide deep insight information about RVs and what is happening on the market. So that's the first news we wanted to share with you, all of this national, but also Jaito related new webinar will help. Now, let's move to the main topic of today with the agenda. So we see the introduction. Now, what we would like to share with Jordan and me today are, let's say, short-term and mid-term signals about what is happening on the market and if something is happening on the market, and taking these short and mid-term signals, what could be our recommendation as autobiz in terms of RV management for people that has fleets and risk in their fleets. Before going to that, and for those who were not connected in February for our first webinar, we would like to take 1 minute to share again the key insight of our Q1 seminar. Main insight was to say the market and the used car market looks stable, but it's moving underneath. What does it mean? It means that there's a lot of micro movements in the market, and these micro movements are not noise, they are opportunities. And why? Because in 2026, for us, the priority, as we see it for the market, is to actually control RV damages and potential losses or wins you can have on different type of, for example, engine. And this you can, for the one where you can potentially lose money, you can't fix RV lose with hope, but you can fix it with active and smart repricing. And it's important because the key factors of the market and the long-term market factors of the market are pretty good. Why? 5 out of 9 European markets in 2025 has experienced growth both in new and used car. We also saw that in 2025, the used car stocks has rebuilt quite quickly, but at the same time, with a rotation of cars and time for sale between 1.6 to 2.2 months, which is still quite reasonable. So the market is growing in terms of offer, but the demand is still strong. And now coming to what we would like to have a deep inside view now today is the used BEV market. First of all, we see that 13% yet of under 7 years old cars for sale in Europe are BEV, but in 2025, the BEV cars were depreciating 50% faster than their ICE counterparts. So something which is not changing. We would also love to get some of your feedbacks and to interact with you today. So we would like to introduce this part about short-term signal by asking you, are you currently seeing early signs of change in European opportunity market linked to what is happening, for example, today in Middle East? So you can use your smartphone and take the picture of the button you see on the top left on the slide. You also have the link in the chat. So we'll let you share with us the insight and say, do you see something happening in the market linked to what is happening at the moment in Middle East? And we'll share live answers. Again, you have the link if you want in the chat. Okay, thanks a lot. What we see, which is pretty obvious when we look at the green sentence in front of our screen, is, and you see other sentences like that, increase of BEV demand, BEV sales. Is that, and that's what we will try to answer in the first part in the short-term signals that we are going to share with you right now. What short-term signal is important? Because at autobiz, we have been the first one back in 2022 to be able to predict the inflation of used car price. And we did it not using the traditional RV follow-up, but looking at more advanced data like repricing. Repricing means the evolution of repriced or newly inserted car in the market versus the standard market price for the same car. In a normal market, the repriced car should be, and are let's say, minus 250 euros under the current car for sale at the moment. You see that back in 2022, we already saw that the first signs of repricing over the market price. The chart you're looking at the moment is about only BEV cars. You also see that starting from 2023, repricing has been far more aggressive than the 250 euros because we have gone until almost 1,000 euros per month every month. But very interesting is we see that this level is going up again. And if we look only for the very last part of the bar, which is March, we see that we are in an historically lower repricing magnitude for over 3 years and a half. So in March, the repricing has been far less aggressive than in the past, which means that dealers were looking as BEVs are more opportunity to sell it better with better price. So that's for the demand. If we look now at the offer, and we also look at a very short-term vision of it, we use Google and Google Trends. So we had a lot of, we look at a lot of keywords helping us to understand what is the current search, and there's demand, the orange line being for used BEV and the blue line being for new BEV. What we see from the beginning of the year is that the blue line, so the new BEV demand, is quite stable, while we actually see, starting from March 29, a peak in search on Google for used car BEV key related keywords. So short term, lower repricing. So people believe, dealers believe they can sell at a better price their BEVs, and some signs of higher demand for these BEV cars.
Okay, so these are the early signals, Emmanuel. What do you think will happen in the midterm, according to you?
Thank you for this very smart and intelligent question, Jordan. We also see that these short-term signals are quite aligned with mid-term trends we see in the market. And we are sharing it with you through this slide. First of all, we see that on Q1 of this year, we have registered, and especially in March, record level of BEV sales and BEV market shares in the new car market. For example, Germany, it grew 66% up to 24% of the total market, 28% in France plus 40%, or plus 46% in Spain, and 9% of the market. So actually, on the new car part, quite big increases in most of the major European countries in terms of BEVs. Also, we may face, thinking about what is happening at the moment in the Middle East, potential shortage could be quite similar to the one we experienced back in 2022. First one is about, again, like 2022, semiconductors volumes issues. The reason for that is that for producing semiconductors, you have to use helium, and helium is massively produced in Qatar. So at the moment, there is very few helium going out of Qatar and being used by semiconductors production plant. They also can have disruption in terms of logistics, especially boats and maritime logistics. And we all know it, a shortage of production of petrol, which could have an impact on cost and pricing. So this, of course, obviously, the oil and fuel price is going up a lot in Europe, which has a huge impact. Also, shipping and insurance costs are currently increasing. So this could have a direct impact on TCO. And while we were, for the last year and a half, experiencing more OEMs being more aggressive in price and tending to lower the price of the car, we may re-enter potentially into an increase of price and inflation of price within the next weeks or months if what we see at the moment continue on a midterm or a longer term. Also, so that's for the global market. But if we look now more carefully about used car, because these could be also being impacted. So what we see is that the share of under 7 years old used cars being BEVs is increasing, but increasing even faster than what we were expecting. So you see the blue line with dots was our expectation for this year. And we see that on Q1, we already had 14.7% of under 7 years old BEVs for sale as used car in the European market versus 13% 5.6 as our expectation. So the offer is going up and going up quite steadily, mainly due to the fact that we are now experiencing the buybacks of cars that have been sold 5, 4, 2 years ago, and who have been the first year of massive BEV sales as new cars. So we have an increasing demand, and it's a long-term now effect and trend of BEV for sale under 7 years old in Europe, which is quite natural. And what is also quite reassuring is that when we look at the speed of sale for this car, we see quite big improvement in Q1. So what we are showing now is the gap of time for sale between BEV on one side and ICE on the other side. So if you look at the first line, it means that in Poland, the gap between time for sale of BEV and time for sale of ICE has been reduced by 34 points, so 1/3. So, and we see that on Q1, this gap of time for sale has been reduced quite significantly for most of the countries we are looking at in Europe, and a lot of time quite significantly. So it means more offer on one side, but also a demand that is growing because time for sale is improving a bit comparatively to ICE. So also, if tomorrow we go back to a more inflationist market with more demand for BEV, we have much more demand than much more offer, than ever to fit this demand. So I let you the room, Jordan. Yes.
All right, thank you, Emmanuel. So now we looked at early signals on the market. We even started to announce what could be the midterm changes, and some of them can already be seen. The idea now is we want to start looking a bit deeper into some structural challenges that we see, and we think will take a bit more time to enable a deeper transformation for used BEVs. So we are only at the beginning of a path, to say that in different words. First thing is basically communication and offer. So I saw that also in the Slido answers. Still, even though we see increased communication and also increased used BEVs offers, there is still a huge discrepancy between what we see for new cars and used cars. So there is something that is not balanced at the moment. The differences also are the fact that today OEMs with their own used car locators do not dominate the used EV demand capture. It's mostly done by marketplaces and intermediaries in the countries. And OEMs also invest a lot on used car labels, on certified programs, which is very important, but doesn't allow the specificities at a model or fuel level. And to this extent, it limits the SEA visibility for a given car or a given model or fuel type. Last thing also on this point is that the fact that the demand is mostly driven and handled by the distribution network, not directly by the OEMs, with far less national communication also on the used BEVs, creating all these differences with new cars. Second, very important topic regarding incentives this time. So across Europe, there is no real consistency between the incentives that are granted for new BEVs, but still there is almost an offer in all the major countries, depending on the level of adoption also of BEVs. What is not true is the existence of used BEVs everywhere. It's more scarce. And for the countries who provide both new car and used car incentives, what we observe is that in average, the used car incentives are 3.5 times lower than the new cars. So it gives also a kind of indicator of how used BEVs are considered and how not strategic they are at the moment, at least for government policies. Third topic is the fact that today the electrification is mostly led by corporate fleets, higher than private. So you see these figures at the end of 2025. In the top 8 countries, the mix of BEVs in the corporate fleet sales plus public sales as well was 28%. while at the same time, we had only 19% of private purchasing BEVs on the same period of time. We know also that there are some strong differences, so we saw that with Emmanuel's figures. It's true also for new car registrations, new car sales, so electrification remains very uneven across Europe. You see countries like the Netherlands or even Belgium at 55%, sorry, of electrification. Belgium is also a market very corporate fleet oriented. While big markets like Italy and Spain also, but Italy 7% of BEVs in 2025. So in the end, all these factors also need to be put in parallel with the fact that the buyers for used cars are mostly private customers. It's no news, but it's key for us to work on the interest of these private customers for used BEVs, because it will be a major driver for residual value in the end. So now if we look at the fuel prices compared to the average depreciation. So just also to help you settle in this slide. So in dark blue, you see the fuel prices evolution, and the lines are depreciation lines. So the yellow one is ICE, the green one is hybrids, and the blue one is BEVs. The message that we wanted to push is that some variables, like the fuel prices in this example, can move quickly. It's also the same for depreciations, but they don't automatically translate into an immediate impact for residual values. This impact comes more in the long term through the total cost of ownership and will affect the value in the long run. But what we want to say is that there is no direct effect, immediate effect between the fuel prices and the residual values for ICEs. A key message also is that if we look back at 2022, and I'm sure it will bring back some hard memories for some of you, 2022, we had a shortage of vehicles due to the microchip crisis post-COVID that we faced. And back then, so we saw that the prices were going up, that the depreciations were going down, and some might have the temptation to review the forecast values upwards or to reduce all the risk. But now that we can look back, we know for sure that 2022 taught us not to overreact, but rather to build an anticipation plan and have a long-term management of residual values. So now, basically talking about residual values specifically, our question is quite simple. We wanted to know where you stand today when it comes about residual values, with a few questions, kind of a checklist that we wanted to ask you to know where you are on this specific topic before we move to our set of recommendations and actions to take in 2026. So we'll give you some time to answer. All right, so we will give you some time to finish answering, and while you do that, I will just tell you about the next part. So basically, you know how we work. Our idea is definitely not to give you a lesson about your own job. That's not the autobiz way, and will never be. But the idea is to give you an external opinion and maybe just an idea of a plan, just to orientate also your decision-making process in 2026 based on the data that we collect and the data that we will continue to collect in the future. So To do so, we have focused on two different specific profiles of vehicles. The first one being ICEs, which should be in the long run impacted by this high oil prices, and the second one will be BEVs. So if we start by looking at combustion engines, we have separated the 2026 monitoring plan or action plan, call it whatever you want, in three different steps, three different times of the year. The first one being today or tomorrow. The idea is that we have listed a set of actions that can be taken directly to build the first diagnosis of where you stand with your ICE vehicles, ICE future residual values. And the very first step is to run a first inventory of the vehicles, basically knowing what is your actual mix of non-electrified ICE and what is also your mix of micro-hybrids. So we decided also to consider the cars, micro-hybrids and ICEs as equivalent, even though there are some slight changes. First thing so is to do that is also it's also to check what is the market reality. So it's something to be done on a market by market basis, as always. The idea is to check if you are in line with the market or not, or if specific actions need to be taken also risk-wise. And the third thing is basically that by 2029-30, so in 3 to 4 years, we believe that pure ICEs will be facing strong electrified competition. So it will be tougher for them to fight against the rest of the offer. And the idea is to start considering a risk for pure ICE vehicles and start also evaluating what can be the future impact of this risk and start calculating the potential provisioning impact linked to this risk. Depending on the brands that you represent, the models that you have also in your portfolio, it's also sometimes important to include the micro hybrids in this first analysis, depending also on the fuel economy that is linked to the micro hybridization. Second step of the plan, so Q3, the idea is to follow two different scenarios. So we anticipated what can be the future oil price if it stays high. The idea is that the risk that you have defined in Q1, part of it will need to be integrated in your RV setting to make sure that the new production is also taking into account this risk. The rest of the risk needs to stay in the fleet assessment reforecasting exercise. It can also be reevaluated at the same time to make sure that you follow also these oil prices that went up. If the oil prices decreases, on the other hand, the risk should be maintained, according to us, at least for another quarter until the end of Q3 before taking back any kind of provisions, etc., and moving to a new scenario. By Q4, so we have divided in sub-scenarios every time. I will not describe all of them. The idea is to basically, the rationale behind it is to start with risk, adding a level of risk in your reforecasting and gradually moving part of this reforecasting in the forecasting values. But the idea is to anticipate, start considering, and not have too fast reactions regarding RV setting, which is important regarding competitiveness, etc. So important not to overreact.
Okay, thank you, Jordan. But correct me if I'm wrong, but we were not supposed to speak about BEVs today. So
we will.
You just speak about these IC. So
we will, but it's only 25% of the mix. So we wanted to say something also about ICs. So now we will talk about BEV because it's one of the main issues. So BEV, basically the structure is the same. There is no revolution the management that we want to suggest. The only difference is that there are more stuff that needs to be checked, at least for the first diagnosis. So one of the elements which is key also is not only the mix of BEV, but also how your buybacks will come over 2026 and even the years after. Is it something that is spread? Do you have any kind of seasonality due to big fleets of one model or Sometimes some seasonal effects like the electric leasing in France with same cars coming back at the same time, same used car profiles. This, of course, affects your RV, so it needs to be taken into account. Second inventory, which is very important according to us, is the inventory of your remarketing. Basically, what do you do today to sell your cars, and do you take all the chances that you can have to sell these cars as fast as possible and at the best price possible? So sometimes it's quite difficult to really evaluate the link between pricing and some elements. It's true for the SOH so far. It's too early to have a direct link, but still anything that brings quality to the advertisement of the used cars is good for at least rotation and eventually price and cost, because you also have lower stock cost. It's also true for multi-channeling. So the idea is also making sure that you publish it in all the channels possible, and also working on your used car offers for retail to have something as sexy as possible to sell these vehicles. Something that is also very important is the used car pricing. So we say that every time, but there is the buyback prices on one hand and the market price on the other hand. So sometimes it's difficult because the gap is quite important. Still, there is a market reality. The market drives the prices. It's important to make sure that you always know where you stand and to realign with the current market to move forward. Then again, we have presented different kind of scenarios depending on how the demand will behave. So it's something that we will have to check over the course of the year, how the demand is for BEVs. If it stays high, our point is to say the risk that you probably have already for BEVs need to be reduced, but only gradually, slowly, not to overreact as well, because in any case, you will need to keep a risk linked to the fact that some technologies outdate, and you need to discriminate the models inside the BEVs. It's not only BEVs, it's BEV models and even BEV batteries. For some of you, you know that you have some examples of small batteries sold a few years ago, and now you have it in your used car stocks, and it's quite a challenge to sell them at the moment. So all of these elements, you will receive it anyway. You can also contact us in case of questions on how to go with it, but I don't want to go through all the steps. I don't think it's necessary at this point.
Thank you very much, Jordan. So we have 13 now minutes left. What we can do? Sorry.
Well, I have one slide left.
Oh, sorry. I thought I was the one supposed to do this. No, sorry.
No. So it's a short message anyway, I promise. The idea is that, so we talk about BEVs, but what is a BEV? It's just an energy, and inside the BEVs we have very different vehicles. And today what we see also is that the new generation of BEVs are coming on the market with technologies that are far more advanced than before. We start with 800 volts. We have also battery ranges over 800 kilometers, fast or even flash charging for BYD. And not only we see that, but we see also that the demand is there. So for the new vehicles that are launched and the orders that are opened, we see that the order intake is accelerating, that some of the OEMs need also to increase the production for these vehicles. So whenever the EV adoption barriers are lifted, we see that the demand is following. On our side, we decided on these vehicles to have more ambitious RV forecasts, and the demand seems to be confirming these ambitions. It means also, on the other hand, that for the competition with inferior technology, the key will be to rely on price, not to reduce the sales, and to avoid also falling residual values eventually. And that's it.
So as I was saying before I get interrupted by Jordan, I will take now 1 minute to just do a summary of all what we say. At the same time, we'll have slightly less than 10 minutes to get your question. I see we have already 2 questions. Please, you can type them directly on the bottom right of your screen, you have a green part saying you can send your question. So please do it now, and then we will try to answer it as much as possible. So coming back to the key insights of what we have seen today. First thing, short-term shock is already visible in the market, and this is linked to what is happening at the moment in the Middle East. But its impact will unfold progressively over time. So that's important to say. It's going to be within the next days, the next weeks, and the next months. New and used car markets are reacting at the same pace, and market dynamics are now differ significantly across country. And taking all of this into account, residual values must adapt at a non-synchronized market. And just to summarize the key KPI we share with you to come to this conclusion, we see a peak plus 40% of used EV demands according to Google. The new EV demand remains below 90-80 is lower, 80-90 versus 130, 140 for a used car. BEV share in new car registration are going up to 28% on the top five, on the top four European Union market, which is France for in this for the percentage of new BEVs, plus 66% of BEV registration, new BEV registration in Germany, and EV adoption range from 7% in Italy up to 2/3, 68% in the Netherlands. So now we can go and have exactly 10 minutes for the question. First one we can take would be, and this I guess it's for you, Jordan. Do you think increase of BEV is more driven by higher demand or by increased numbers of models available in the market?
Probably a bit of both, but the increased number of models on the market arrived also quite a while ago now. So the offer is also increasing every time, and it's probably something that we can address in the future webinars that we'll do with Pageot, because it's directly linked to the new car offer, but it's also driven by a higher demand directly. The good news, and when Emmanuel showed the stocks also for the used cars, so the fact that now we have something like 15% of the stocks of the used car stocks of BEVs, it means also that now we have more offer also on the used cars, more models, more alternatives for people really looking for used BEVs. But it's something I believe this question that we can address also more in depth in the next webinar.
Okay, second question, why new car BEVs are not increasing in sales/price? And do you have assessments on RV specifically?
On this one, so I'm not sure, because basically the new car BEVs they are increasing in. Is it in number of sales? If this is the question, the answer is yes. In terms of price, what we have seen in the new car is more repricing downwards than the other way. We see also for some new vehicles that are launched to replace former ICE vehicles, that the TCO is generally lower, at least at the same level, with an MSRP that is going downwards. And for the RV question, I think we need to enter at least some models and make sure that we understand exactly what you want. But of course, you can contact us on this part to answer this question in more depth as well.
So we also have another question. Is autobiz able to manage my RV according to the checklist you mentioned? I guess the answer is yes, but I let you answer. Yeah, because basically to answer it, what we're sharing with you today is insights and know-how that we have seen with our clients, and that basically works on a daily basis and a very operational basis with some of our clients. I'm not sure we have more questions now. We have 5 minutes ahead of schedule. So thanks all of you for attending. We have been up to 50 people today during this call. We actually appreciate a lot your presence. Thank you very much for being there. I'm sorry for having interrupted Jordan for a couple of seconds. And we look forward having a lot of you in our Italian, Spanish, and French and JTO related webinar we're going to have in a couple of weeks now. Thanks again. Have a great day. Have a great week, and talk to all of you soon.
Thank you. Have a nice day. Bye.